Listen up because this is big. China's been making some major moves in the financial world, and it's got everyone talking. They're shaking things up, and not everyone's happy about it. For US investors, this isn't just some far-off storm, it's happening now, and it could hit your portfolio. For years, China's been a major player in the global economy, but they've been pretty quiet about it. Now they're flexing their financial muscles, and that means we need to pay attention. They're selling off US debt, dumping stocks, and basically sending a message: the game is changing. This isn't just about money, it's about power. China wants a bigger piece of the pie, and they're not afraid to ruffle some feathers to get it. So buckle up because we're in for a wild ride. The bottom line is, ignore China at your own peril. It's time to get informed and protect your investments.
Here's the deal. China's been quietly dumping US Treasury bonds. They've been doing it for a while, but it's really picked up steam lately. Why does this matter? Well, China's been one of the biggest holders of US debt. When they sell, it puts downward pressure on bond prices and drives up interest rates. That means your loans just got more expensive. But wait, there's more. China's also been selling off US stocks. They're not dumping everything, but they're definitely reducing their exposure. This selling spree adds fuel to the fire, potentially driving down stock prices and creating uncertainty in the market. Some folks say it's no big deal. They claim China's just rebalancing its portfolio, but I'm not buying it. This is a calculated move, and they are sending a message.
So, what does this all mean for us? First off, expect volatility. The market hates uncertainty, and China's moves are creating a whole lot of it. We could see some wild swings in the stock market as investors try to figure out what's next. Second, interest rates could rise. I know the Fed just raised rates again, but China's selling of US debt could force the Fed's hand even more. That means higher borrowing costs for everyone. Third, the US dollar could weaken. As China sells off its dollar-denominated assets, it puts downward pressure on the greenback. A weaker dollar makes imports more expensive, which could lead to inflation. Look, nobody knows for sure what's going to happen, but one thing's for sure. China's actions are going to have a ripple effect throughout the global economy.
Section 4. Shielding your investments. Strategies for U.S. investors. So, how do you protect yourself in this crazy market? First things first. Don't panic. Now is not the time to make rash decisions. Instead, take a deep breath and assess your portfolio. Next, consider diversifying your investments. Don't put all your eggs in one basket, especially if that basket is heavily weighted towards U.S. assets. Look for opportunities in other markets that might benefit from China's moves. Third, consider investing in companies that are less exposed to China. There are plenty of great American companies that do most of their business domestically. These companies are less likely to be affected by China's economic slowdown. Finally, stay informed. Keep an eye on the headlines and listen to what the experts are saying. Knowledge is power, and the more you know about the situation, the better equipped you'll be to make informed investment decisions.
Section 5. Navigating the unknown, predictions and expert opinions. Now let's talk predictions. Nobody knows for sure what the future holds, but the experts are starting to weigh in. Some are saying that China's moves are a sign of things to come and that we're headed for a major economic downturn. Others are more optimistic, believing that this is just a bump in the road and that the global economy will eventually stabilize. Who's right? Honestly, nobody knows. But here's the thing. It doesn't really matter. The key is to be prepared for anything. That means having a solid investment plan, diversifying your portfolio, and staying informed about the latest developments. Remember, investing is a marathon, not a sprint. There will always be ups and downs in the market. The key is to stay focused on your long-term goals and not let short-term volatility derail your plans.
Section 6. The long game understanding China's financial strategy. Here's the bottom line. China is playing the long game. They're not interested in short-term gains. They're playing for keeps. They want to be the world's leading economic superpower, and they're willing to do whatever it takes to get there. That means we need to be prepared for a long and bumpy ride. The global economy is in uncharted territory, and there are no easy answers. But by staying informed, Diversifying our investments and keeping our eyes on the prize, we can weather the storm and come out stronger on the other side. Remember, investing is not for the faint of heart. It takes guts, determination, and a willingness to embrace risk. But for those who are willing to put in the work, the rewards can be substantial. So stay informed, stay invested, and never give up on your financial dreams.